Test, test, 1, 2, 3. Hey, what's going on, team? It's Ricky with TechBud Solutions. I hope that you guys are all having an amazing Sunday and happy Easter. Hopefully you guys are spending time with your loved ones. Wanted to go live very, very quick. I'm just going to break down 5 stocks. I'm going to be providing them and breaking them down in our risk to reward calculator just to make sure that it's very easy to follow. And after, if you have any questions, please do not hesitate. You can always just shoot me a direct message either via Discord or via Instagram, which is all linked in the description of this video. If you have any stocks that you would like me to break down, all you have to do is subscribe to the channel and partake in the live chat. That's all I ask you to do. Hopefully I earn your thumbs up if you learned something new, and if so, please consider subscribing. So let's go ahead and jump right into it. Yep, Jorge, so you're asking me to break down ARDX. Let's go ahead and just get right to it. So ARDX, that is the ticker symbol very, very quickly. Let's see if this one's going to be one that I'm going to add to my watch list. On the 4-hour time frame, it looks like we're a little bit more on the bearish side. Again, if something is consistently selling off, I'm not the biggest believer in just buying the dip. If there's no indication of a recovery, I don't really want to be one of the first ones to kind of test it out, right? So ARDX, I'm just going to type it in out here. So again, for those that are not familiar with this is our little risk to reward calculator. It breaks down the risk to reward ratio and your potential profit and your potential loss, just depending on the account size that you trade with. It's all free and available for you to download. It's on techbudsolutions.com. So it's one of the first posts. It's under the trading checklist and you can download it for free. We have it under the numbers tab, and then there's the Excel sheet if you do not have a MacBook yourself. So let me go ahead and break this one down. So, and please, if you think that I'm wrong for breaking it down the way that I'm breaking it down, I'm open, right? I'm open to the idea of understanding that we all see value in different ways. So feel free to share your opinions down in that live chat. But one of the things that I have to point out right away that I noticed with ARDX is that it had a really strong rally. It looks like it began trading sideways, showing signs of a resistance, and now we're on this retracement stage. This is the perfect example of what I want to talk about, that when something gaps up very quickly, it then lacks progress. It pretty much trades sideways, and then it retraces itself. It corrects itself. It's not that it has to come crashing all the way back down, but it comes back down to a more realistic value. This is something that happens pretty often anytime something gaps up too quickly and then has to correct itself shortly after if that hype does not continue, right? And this is kind of what we're seeing right now. I see there to be no reason on why to buy this right now, because I don't know if it's going to stop here at $7. I don't know if it's going to continue to sell off to $5 right around the moving average, or if it's going to continue to sell off and go back to $3. And guess what? I'm not someone that likes to buy lower cap stocks. I don't like that this thing is trading at $7 per share. Yes, it offers potentially more reward, right? But obviously with more reward comes a greater form of risk. Nonetheless, let's go ahead and break it down. What would I need it to do? So in a perfect world, right, that's what I'm going to set up for. Let's say that all of a sudden this thing begins to indicate signs of an uptrend. I see there to be no reason on why to buy this stock if it continues to sell off, right? We have this saying that the cheap can always get cheaper. So I would have to wait for a break above VMA. As of right now, that would be, for this thing to break above 780, and I would probably want to be a little bit more patient. So I'm going to buy, let's say the goal would be to buy right around 790. So the desired entry price is going to be $7.90, but I want to explain to you my why. The reason behind that is it's a consistent descending pattern below this EMA. Now, if it begins to indicate signs of an uptrend above that EMA and actually begins to show signs of growth, then maybe I can consider, right, go in with a small position and maybe feed it more if it begins to indicate more signs of an uptrend. But what's my price target? Well, based off previous highs, it looks like it had a $10 resistance, but I'm going to be a little bit more realistic and go for about $9.38. It's more of a common resistance zones, even $9.20. We can go for more of the conservative side. We've hit $9.20 many times. So I'm just going to set $9.20 as the goal to exit for this. And just like anything, not every trade goes according to plan. So if I buy in at $7.90, where am I going to cut losses? Well, if it breaks above EMA, but then breaks back below, that's a break of pattern. So maybe I'll cut losses right around 770, giving it a little bit of room below that EMA line. So I'm going to go here, and then I'm going to go 770. Okay. So now this, it doesn't look like it actually followed through. So what I'm going to have to do is I'm going to have to follow this thing all the way down. That's fine. These things haven't been filled. So it looks like this thing has a risk to reward of around 650. That means it offers 6.5% for potential upside for every 1% of potential downside. Let's say that I want to go in with this with about it's a higher risk stock. So let's just say 100 shares. 100 shares would put me right around $800. And again, this thing should be able to calculate that. So let me go ahead and bring that down here. Should calculate that. $790 is my overall potential profit. Let me go ahead and drag this down, and then it should calculate my potential profit and my potential loss. So really cool, right? Just to be able to input this, it says, okay, this is my desired entry, my desired exit. Even before taking the trade, I can kind of just visually see it. Okay, I could potentially make $130 in a perfect world, and in a perfect world, I could potentially lose $20. So even before entering that trade, I already have a little bit of a better understanding of what I'm getting myself into. And how many times have you entered a trade and then instantly regretted it because you're like, holy crap, I'm down a little bit more than what I expected, or a lot more than what I expected. And now, I'm just going to bag hold. It's kind of one of the worst feelings, right? You almost get like shocked when you see it. And the whole point of this risk to reward ratio calculator is not to have a perfect success rate. That's never going to happen, right? Risk is part of this game. It's not to avoid it, it's to manage it. But at least you make yourself more aware of what you're getting yourself into. So then even before taking the trade, you can be like, oh, wow, very easy. I can follow up with this actually choose to take the trade if it's something that I actually agree with once it's all laid out and planned out. So let's go ahead and move on to the next one. So we have a lot of people asking about Tesla. Tesla's one that I've broken down before. I actually have it in the sheet already. So right now, Tesla's trading at right around $175 per share. It continues to get rejected off of this moving average. So you see, it ran up, got rejected, pulled back. It looks like it's breaking below EMA, and it might continue to sell off. So as of right now, I see there to be no reason on why to jump into something like Tesla. Tesla's continuously bearish, lower lows, lower highs. But let's say it does break above the moving average. Let's say that my desired entry is 188, right? So I'm going to go ahead and input that right on over here. So my desired entry is 188. My desired exit, I'm very familiar with Tesla, so it should be relatively right around $260 per share is the previous resistance zone, right? To right around 260. So again, waiting for that break above right around 188 and aiming for that previous resistance based off previous patterns. Again, in a perfect world, right around 260. So I'm going to input that very quickly. And then, excuse me, sorry about that. And then the cut losses should be, okay, well, if it ends up breaking back below that EMA, that's a break of pattern. So I should potentially cut losses. I'm going to give it a little bit more room, maybe right around, instead of 186, I'm going to give it some more wiggle room because Tesla's pretty volatile. So maybe right around 184. So this thing tells me, okay, as an 18 to 1. So 18% upside versus every 1% of downside with right around, I'm going to go in with, let's say, again, Tesla would be one I would be a little bit more confident with. With 100 shares, that means my trading size is around $1,800. I could potentially make $7,200. I could potentially lose $400. So before even taking that trade, I can visually see what I'm getting myself into. If this plan is like, oh, wow, it doesn't make sense, the risk might be too high, I can then see this all laid out before actually taking a trade. Let's go ahead and move on to the next one. If you guys want me to break down your stock, again, all we literally ask you to do is to share it in that live chat, and I'd be more than happy to break it down for you. There we go. We got TY Guy. So TY Guy is asking for me to break down WYNN. Let's go ahead and break that down. So WYNN, let me add a few of them here. And then we have MU. So MU is being by Droids X3, sweet. And then we have Bailey with SOXL. So we'll start off with those. Let's go ahead and start off with Win. So when looking at Win, let's go ahead and see where this thing is at. All right. So Win, a little bit more of a consistent uptrend pattern based off of recent patterns. Looks like it's bouncing off of this EMA line, still trading above the moving average, but almost this descending resistance based off of recent patterns. Look at this. Lack of progress, this descending lower high, lower low. I'm kind of indifferent about this. I don't know about you, but based off of previous highs, let me know in the comment section very quickly. I'm asking you guys a question, so if you guys can engage, that'd be appreciated. But I just want to know if you think that I'm completely wrong for this. Obviously it's still above the EMA line, but it's coming off of testing a previous resistance zone. Do you think I'm wrong to think that we're at a resistance and potentially going to pull right back down? Because it looks like we've already hit that resistance. So, are we going to bounce off this EMA and just all of a sudden continue to rally, which again is a possibility, or is this thing a descending resistance, descending pattern based off of already hitting that previous resistance of right around 107, 108, and then it's a descending pattern that once we break below that EMA, once we break below that moving average, we're just going to sell right back off to $80, right? It is at a support, and that's definitely something that I want to take into consideration. But when you look at closer timeframes on the 4-hour, do you see more of this descending pattern? Lower highs and lower lows. That's kind of the part that concerns me. The support that it has right around $100 per share. Maybe I'm just completely wrong for thinking that, but I'm seeing lack of progress below that. Nonetheless, again, let's say that it does end up holding above. I mean, that's the whole point of the risk to reward ratio calculator, to see if it meets our criteria. We are holding above EMA and we are holding above the moving average. So as long as it holds above that, then that's fine. So let's say my desired entry point is going to be right around 101. Desired exit based off previous highs should be right around 108, right? So 101 entry, 108 exit, and then cut losses. Well, if it ends up making new lows, I'm going to have to accept that I'm going to cut losses. That's going to be right around $98. Is that fair? So let me go to enter that very quickly. 101, very simple. Desired exit, 108, very simple. And then this one's going to be 98. And then I can see right away, okay, this is my risk to reward ratio. Not as favorable as the other ones, but still not horrible. And then you just kind of have to ask yourself, okay, well, if I go in with 100 shares, what is my overall position size? It's going to be right around $10,000. And then when looking at my potential loss and my potential profit, what exactly does that look like? Very, very simple. We just go ahead and drag this down and it should populate it for us. Okay, I could potentially make $700. I could potentially lose $300. It makes it very easy for me to understand what I'm getting myself into. If right off the bat, you're like, okay, no, I don't want to take this trade. It's not as favorable. It's not as, unique as I thought it would have been originally, but that's the whole point of you planning out your trade. So Tiki, our old favorite. Yep, I'll go ahead and add that to the list. So what's going on, Joe? How you doing, brother? So let's go ahead and move on to MU. MU right now, that's Micron Technologies. A little bit more on the overbought side. Let me ask you guys very quickly in that live chat. There is no right or wrong, right? Because we are all entitled to our own opinion. And at the end of the day, you are the final decision maker on what you choose to trade and what you choose to invest in. What do you think about Micron Technologies? Now, let me ask you, the person that asked me to break down Micron, did you ask me to enter this as a going long or going short? Let me know. I think was that Droids that asked me, or was that someone else? So obviously Micron Technology is extremely bullish. It just hit highs of 122. But is it me? Or does this thing look a little bit more on the overbought side? It looks so overbought, looking at that RSI, looking at that MACD, that it's almost due for a pullback, right? Okay, so I just want to make sure that that was understood. Now, just because it's overbought, let me make this very clear. Just because it's overbought does not mean that it's something that you want to short, because when it is incredibly bullish, it's something that you want to be very careful with, because if the hype continues, it can go higher for longer, right? That's kind of the whole idea of the AMC movement. The question was never, AMC is overvalued. Everyone knew AMC was overvalued. All the Reddit traders knew that it was overvalued when it was trading at $70 per share. The CEOs, the executives, why do you think that the executives sold so many shares when it was trading at $50 or $70 per share? No one ever questioned that AMC was worth $70 per share. The only question that people had is, can it go higher? And that's the thing. It's when you're actually entering a short position, you have to understand shorting comes at a greater form of risk. You want to make sure that direction is truly in your favor. And I just want to make sure that you don't enter a position shorting that you end up regretting because of hope, right? Hope is not something that you want to choose to have when it comes down to shorting. If you have hope to invest into something that might appreciate over time, odds are more likely in your favor. But hope, when it comes down to shorting just comes at a different level, a different tier of risk. So please, if you're not the best at risk management, if you're not the best at holding yourself accountable, do not open up a short position. But very, very quickly, what would I need Micron Technologies to do to potentially consider shorting? I would need it to break below EMA, and I would need it to be actively selling off. But you might be like, but Ricky, that means that it can lose all of this and I wouldn't take advantage of any of it. That's right. Because if it all of a sudden begins to take off, you also don't partake in any of that potential loss. You have to understand you're looking out for your downside risk, not just your upside potential. So again, I would need it to break below EMA. So my idea here would be that, potential open short if it actively begins to sell off below 109, and then potential cover right around 94. So that's not going to work so well with my trendline tool or my risk to reward ratio calculator, because obviously this is to go long. So will it? Maybe you'll do it backwards. I don't think you'll do it this way. So let's say 108 to 93. 108 to 93. And then stop loss would be right around 110. Okay, so potential entry, potential exit. It actually somehow works. Potential entry, potential exit, and cut losses is right around 110. It says it offers a 7-to-5 ratio. I'll have to double check that, making sure that the math is right. Let me go ahead, and I don't think this is going to work well for it. Okay, so it says your potential loss is 1,500, but that's not necessarily true. That would be your potential profit, and your potential loss would be 200. So you just have to look at that at a different way. But yeah, and your overall position size would be right around 10,800. So something to take into consideration. I'll set my alert. I'd love to follow up with this. I have to right click with my left hand because my fingers aren't strong. My right hand isn't strong enough because I'm still struggling. And then I'll set my alert here too. Right click over here. I don't think it added it. All right, there we go. Okay, let's go ahead and move on to the next two. We got SOXL. SOXL. All right, SOXL, I like it. Consistent uptrend pattern based off of recent patterns. This is probably one of my favorite ones that we've broken down so far because it's the closest to the moving average. It's not that it has to go up, but that it can. And yeah, I like the setup. It previously got rejected right around 48, but it has a previous high of around 56. So let's say that I do wait for, I do enter right now and then I cut losses. That's going to be a tight one. This is going to be a riskier one because I'd cut losses a little bit quicker. Let's say right around $43. I enter at 46, cut losses at 43, and desired exit at 56. Let's do that. So 46 entry, 56 exit, and 43. Is that correct? Let me double check that. Yep, 46, 43, perfect, 56. And then let me go ahead and just drag this thing down. Okay. All right, so a $4,600 position, I could potentially make $1,000 and I could potentially lose $300. My risk to reward is around a 3.331, which is not bad, right? It's all dependent on, hey, do I like that it's a consistent uptrend pattern? Can I tolerate that kind of risk? What's my position size that I want to put into it? It puts things really into perspective. So I really like that. Let's go ahead and talk about TQQQ. All right. Now, NASDAQ market has been incredibly bullish. This is where it gets kind of challenging. Have you guys felt the same way as me, where the NASDAQ market is so overbought, I don't want to buy into it, but it's so bullish that I also don't want to short it? So, in a perfect world, what would I need it to do? I would need it to get closer to the moving average, right? Because that's the part that I think a lot of traders get confused. They might be like, well, Ricky, why are you coming up with a price point that isn't valid or isn't real right now? Well, you get to decide what you jump into. You understand that, right? You don't need to buy at $61 just because it's trading at $61. You can wait for it to get to a price point that makes sense to you based off of what you need your risk to reward ratios to be. And if it doesn't get there, then you don't buy. Imagine trading that way, to being that disciplined. But let's go ahead and break it down. I would need this thing to trade right around the moving average, which is right around $59. And I would plan to sell right around previous highs of right around $64. So from, what is that? $60 or 59 to highs of 64. Let me go ahead and break this one down. So from 59 to highs of 64, and then I would cut losses and give it a wiggle room of 57. So I'd cut losses there. My risk to reward would be a 2.50. So 2.5, 100 shares would be $5,900. I could potentially make 500 and then lose 200. But again, it puts things into perspective. Okay, then I don't even have to follow with that loose of a stop loss, because if you look at that, $57 is pretty low here. That's far below the moving average. I could choose to follow a little bit tighter if I wanted to. And that's the beautiful thing, is that you get to decide your own trade plan. Now, at that point, if I wanted to choose 57.50, that could be something that I can choose to do as well, bringing my risk to reward ratio a little bit better, but also potentially having a easier stop loss to get triggered. But this is what I love about the trendline tool. And again, you don't have to use our risk to reward. How do I keep calling it trendline tool? You don't have to use our risk to reward ratio. The whole point of this is, you can calculate all of this yourself. This is just to make it a little bit easier, right? And we provide it for you guys for free. So if you want to download it, again, it's on techbudsolutions.com. We have it for you on an Excel or on numbers if you guys have a MacBook. But I think that's the beautiful thing about this, is that you can wait for your opportunity to present itself. You can plan out your trade, your entry, exit, stop loss, and you can plan out your position size. So even before you take the trade, you know exactly what you're getting yourself into. But most importantly, you know your risk as well. And I think that's the most important part. You can visually see it before you take the trade. So once it does happen, if you get close to the stop loss and you're down $150, it shouldn't come as a surprise, because you knew that was the risk of getting into that trade. And that's just one thing that I hope as you guys begin to actually trade and plan out your trades, that you simply hold yourself accountable to the trade plan that you created. Don't ask me where to buy and where to sell, and don't ask others, because if you can't decide yourself, then in all honesty, you just are not ready to take the trade. And that's okay. I would rather you be someone that realizes that and then takes more time to understand what makes a good buy and what makes a good sell, than someone that just says, F it, I'm just going to buy because I can. Remember, you're here because you want to, not because I'm making you do it. So understand that. Please separate those two, that you are choosing to be here, you are choosing to trade. So why not do it right, and do it in a way that if you do fail and if you do lose, you do it in a calculated way. Fail fast, fail forward, right? But you need to make sure that you do it not blindly and ignorantly, but that you do it in a calculated way. So again, if you guys haven't downloaded your free sheet, it's on techbudsolutions.com and it's provided for you down here. But let's go ahead and do one more stock. I'd be more than happy to break it down for you. I'm going to break it down for you, Russell. That's DELL. And then I'm going to break down one more stock. So again, if you want me to break down your stock, just share it in that live chat. All right, let's go ahead and see where Dell is at. Dell Technologies. What the heck? Okay. Overall, an extremely bullish company. Currently sits at an $81 billion market cap. It had a huge gap up and has been kind of struggling since then. So right off the bat, this would not be something that I would trade myself. I do see there to be upside potential if all of a sudden it continues to take off. But understand, NASDAQ market is extremely overbought. It is very bullish, but it is overbought. So the potential for this thing to continue to sell off is there. But again, let's just say in a perfect world, it continues to hold above EMA. My desired entry would be right around 112. Let's just say 113. My desired entry would be 113. Previous highs, let's say that my desired exit's 125. And then my cut losses is going to be right around 110. So 113, what was that, 130? No, I'm going to go for 125, seems to be more realistic. And then 110 is going to be my cut losses. Should calculate it all for me. This would mean that my position size with 100 shares would be around $11,000. Desired potential profit, $1,200, and potential loss, $300. My risk to reward ratio would be 4.0, which means that every 4% for potential upside offers 1% of potential risk. I think that's a pretty solid risk to reward ratio. My simple question to you is not just the risk to reward ratio, but do you believe in Dell enough? Do you think the fundamentals are there and the technicals are there that it's going to continue to rally? And if so, maybe something to follow up with. My concern is how it's been making lower highs and lower lows, and how this might be the peak before it sell off. And again, just because the reward outweighs the risk doesn't mean that you need to take the trade. It just means that, again, like the ratios are in your favor. But if you see that there's any potential reason that this thing can continue to sell off or direction is changing, then look out for yourself, right? Just be like, okay, the ratios look good, but maybe I'm going to have to give it a little bit more time for it to, wait for that proper confirmation or make sure direction is in my favor. But let's go ahead and move on to the next one. So we got Gush by Chavis. So Chavis is asking me to break down Gush. I don't have room for it on my sheet, but let me see if this is one that I want to break down. Okay, so Gush is approaching previous highs. Actually, this one's not that bad. It's a little bit more on the overbought side, testing previous resistance levels. This is kind of a pickle, I would like to say, right? Because we're at previous resistance levels and we've tested previous lows. So is this going to surpass previous highs and continue to rally? That's one that you have to really ask yourself. This is going to go higher for longer, and this is just the beginning, where it could go to highs of $61 if that's what you believe. Or is this a resistance based off previous patterns and we're headed back down to zero? That's kind of the question to ask yourself, where maybe we want to wait more for confirmation. Like, why jump in too early? We're at $41. Previous resistance is at $42.20. Let's just wait for the break above. And if it does break above, then maybe I can consider entering there. But I would rather not enter now at 41. And then my potential downside is all the way down to 28. Obviously, I don't have to hold it down to 28. But at that point is, again, you're buying at a very overbought level. That's kind of my concern with these stocks when they're very, very bullish. That's great. But now we're approaching a previous resistance where direction can ultimately begin to change. So that's going to be my big question. If we begin to show signs of progress above previous highs, then again, maybe something to entertain with a small position size. But if this thing begins to pull on back and indicate signs of reversal, then understand we might be a little bit more on the overbought side and getting ready to pull on back. But I had a lot of fun with you guys. If anything, you guys let me know if you guys would like me to share this, the series of stocks that we broke down today. I can export it and share it to you guys via Discord or via Instagram. And again, it is available for free to download at techbudsolutions.com, which you guys can see right on over here under the risk to reward ratio calculator under the numbers or Excel sheet. So other than that, I appreciate you guys' time. Again, I do want to remind you guys, I do trade live every morning. I'm super, super excited after this 3-day weekend because of Good Friday. The market was closed on Friday. We're going to kick off the trading week on Monday. I saw that a few of you guys signed up over the weekend. Really excited for you guys to experience what it's like to watch me trade live now that you're a part of LPP. And I want to remind you, if you have not joined already, we are offering you 50% off, and it's the second link in the description down below. You can sign up by today and you can watch me trade live as soon as tomorrow. When you sign up, make sure you watch the first 3 videos in the lesson library, and it's going to show you exactly how to get access to the Discord and how to watch me trade live. The last thing that I do want to remind you is our Apple Vision Pro giveaway with the Corvette giveaway ends tonight. So if you buy anything from our store at shoptechbuds.com, which is the 4th link in the description down below, especially for all of you LPP members, if you guys buy anything, it will automatically get you entered for both the Corvette and the Apple Vision Pro giveaway. But tomorrow on Monday, one of you is going to be announced the winner for these $3,500 Apple Vision Pro. So if you guys haven't done so already, 4th link in the description down below, shoptechbuds.com. Every order gets you entered for your chance to win both giveaways. But on Monday, one of you will be announced the winner for these Apple Vision Pros. So if you haven't already, go ahead and click those links and get your entries today. So I appreciate your time. Hope that earned your thumbs up. Please consider subscribing. If you have any questions, feel free to comment down below. And like always, let's make sure that we end the year on a green note. Take care, team.